Hi, everyone. So welcome to the live stream today. Very much excited for having you on the section 3 of our discussion on cost accounting in management accounting for ACCA F2, ACCA F5, CIMA P1, ICA Introduction to Man Accounting, ICA Management Accounting, and other studies in management accounting. In case you've missed the series so far, you can check the description to this video. I've put all the lectures there, including how to pass management accounting and the various principles that I explained to you on how you can pass management accounting. So welcome to the live stream. I see some of you guys joining. We are continuing with our discussion towards the basic principles, the basic assumptions, the basic concepts when it comes to management accounting. And I see some of you already smashing the like button. Thank you very much. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as many students as possible. Most importantly, I want you to comment in the chat box any questions that you have for me, topics that you would want us to cover on the live stream, and how I can assist you better in order for you to prepare well for your examination. Also, take some time to click the link and share it with your friends, your colleagues, and other students that will be interested in materials like this, as well as our content on the channel, over 500 videos and still counting on the channel to help you and others so we can together make the world a better place. So thank you. And we want to go straight up into our discussion today. If you have any questions, put it in the comment box for me. I'm going to read all your comments and also be replying to all of your comments for you as we go straight up into our discussion. So let me share my device with you quickly, and then let's go into it. Let's see. Got it coming up. Right. It's up. So we were on the issue in relation to classification of cost. And that was what we started since Monday, dealing with the basic assumptions, the basic principle when it comes to management accounting. And so far, we've discussed a couple of issues about classification of cost. We define cost as the amount of expenditure incurred on an activity, a process, or an undertaking. We mentioned the issue about cost classification as being the processes involved in grouping of costs into various categories based on certain features or based on certain criteria. Then we mentioned that there are a couple of bases through which cost can be classified. We said cost can be classified according to nature. Now, classification of cost by nature is where we classify the cost according to the elements of cost. And we made mention of the fact that there are 3 elements of cost: material cost, labor cost, and then the expenses. And we spent some time to look at the differences between direct material cost and then indirect material cost. I hope you remember all of these points. Then the second thing is classification of cost according to behavior. And that was what we were on yesterday, and we ended the stream in that case. So we said classification of cost according to behavior has to do with where we are classifying the cost according to the variability of the cost with the output level. So we said it is from this cost classification that we have the fixed cost, the variable cost, semi-fixed or semi-variable, which can also be referred to as the mixed cost, as well as the step cost, So we want to spend time today and continue with our discussion in these things and see how we can excel in that case. So I see some comments coming in. I'm going to be reading them real quick and then see how I can proceed with our discussion today. So we mentioned the concept about the fixed cost. We defined we looked at some examples of the fixed cost. Then we came to the issue in relation to the fact that fixed cost and variable cost could be put together, and that gives us the contribution charts. And I drilled this yesterday, told you that we're going to be looking at this much later on in our discussion. So you stay with me on that. Then we came to semi-fixed costs that are partly fixed or partly variable, or costs that include both fixed components and variable components. Then we came to step costs. We said that it is a cost that is fixed in nature, but it's only within a certain level of activity. It is fixed in nature, but within a certain level of activity. So these are the things we mentioned. But in the concluding stage of the thing, we mentioned that we have to find out if we are given the mixed cost or we are given the semi-fixed or semi-variable cost, how do we split it into 8 various components? How do we get the fixed component and then the variable component? And we made mention of the fact that to be able to get a fixed component and the variable component, we're going to be using the concept called high and low method. And that was where we ended yesterday. So we're going to be taking it right from there with the high and low method. Like I mentioned yesterday, this high and low method concept is critical, not only in the splitting of mixed costs into their fixed component and variable components under the introductory aspect, but even in budgeting and budgetary control in ICA management accounting exams, there has been instances where under budgeting and budgetary control, students are required to use the high and low concepts to be able to derive fixed costs and variable costs, even though they are under budgeting and budgetary control, or they are preparing the budget statements or the budget forecast of an organization. So it is very, very important for you to understand the concept very well. Abi Nwemba said, good evening, watching from Zambia. Good to see you today. What a beautiful day the Lord has blessed us with. May God continue to bless you, sir. Amen. Obi, God bless you too. Desmond Darkwa said, good evening and welcome, sir. Good evening, Desmond. I hope you're doing well. You've been with us throughout on the series. That's very great in that case. Now, for those of you who also want to get the full experience, because some of you have been asking us to post a couple of things on the channel, but because of the volume of topics we receive, we may not be able to post as much as we can on the channel. So if you want to get access to the full course, you can enroll directly on our website, NhyiraPremium.com, to study directly under my mentorship. That gives you access to the full course content, and you'll be able to also join our weekly live Zoom sessions, get access to the ebooks, the question kits, so I can mentor you, hold your hands, and assist you much better in order for you to prepare well for the examination. Because what we do here on YouTube may not be enough, and it's not enough for you to really get a grips or grab of whatever it is you need to do in order for you to pass the examination. So Desmond said, please take your time and elucidate the curve concept well for us today. Thank you. Which curve concept are you talking about? Which curve concept are you talking about? Are you talking about this curve or so? Let me know which curve concept you're actually talking about, so I can take my time on that for you. So the high and low method, like I mentioned earlier, if we are given mixed cost, which includes both the fixed component or the fixed cost and the variable cost, how do we split it up? How do we get the fixed components? How do we get the variable components? And that is what we want to get into real quick today. So the way we do this is to use the high and low method. The concept of the high and low method simply states that the first thing is to be able to identify the variable cost per unit. So we say that the variable cost per unit equals maximum total cost minus minimum total cost divided by maximum output or activity level minus minimum output or activity level. So that is how we get the variable cost per unit. The maximum total cost minus the minimum total cost divided by the maximum output minus the minimum output, divided by the maximum output minus the minimum output. So there's a question coming from Desmond saying that the TC and TR, okay, Kev, like I mentioned, That is the break-even chart. We will look at, like I'll come back to this particular chart here or curve here later on when we are doing break-even analysis. Okay, so under break-even analysis, we're going to be explaining this much better there, because when we do break-even analysis, we calculate the various numbers and get the various indicators. Then we can use that to be able to come and plot on the diagram. Then we can make sense of exactly what is going on there. Jeremy Rose said, good evening, sir. Like I said, one on FR, FM, PSA, but getting the money at once have been delaying me. Please give me the schedule because I want to register for one now. Our live Zoom sessions, public sector is on Mondays at at 6 p.m. to 9. So PSAF is on Mondays. That's 6 p.m. to 9 p.m. What else did you say? Financial management is on Thursdays, the same time. And financial reporting is on Friday, same time. So that is our weekly live Zoom sessions. Now, in case you missed these sessions also, the good news is that you'll be able to get a playback on our online study portal in that case. So these are the three sessions, there's three subjects, and when we take them, they are all from 6 p.m. to 9 p.m. Then Jeremy again said, for the rest, I will register them because I don't want to be missing lectures. Okay, okay. So that is it about that, Jeremy. Right, so with the high and low method, we are saying that the first thing we're going to be finding out is how we calculate the variable cost per unit. How we calculate the variable cost per unit. And the variable cost per unit is going to be the maximum total cost minus the minimum total cost divided by maximum output minus the minimum output, which simply means that if the examiner gives us a question and we are looking at a question, the first thing that must come in our mind is what is the maximum total cost? So we need to know what the maximum total cost is. Then we need to know what the minimum total cost is. Once we know that, we have to be able to determine what the maximum output level or activity level is, as well as the minimum output or activity level. Once we get the variable cost per unit, two assumptions are going to be central for us to continue with our discussion. The assumptions we're going to be using here includes the following. One, that variable cost per unit remain the same irrespective of the output level. Variable cost per unit remains the same irrespective of the output level. So that is the first assumption. Once you get your variable cost per unit, the assumption that we're going to be staying with and using is going to be that the variable cost per unit remains the same irrespective of what? The activity level. The variable cost per unit remains the same irrespective of the activity level. Then the second assumption is that fixed cost remain the same. Again, irrespective of output level. Fixed cost remains the same irrespective of the output level. So what are we saying here? We want to split the mixed cost into its fixed component and the variable component. How are we going to do that? We're going to do that using the high and low method. What is the high and low method about? The high and low method is simply the method that we use to determine the variable cost per unit. How are we going to do the variable cost per unit? That is going to be the maximum total cost minus the minimum total cost divided by the maximum output minus the minimum output. This gives us the variable cost per unit. Now, once you have the variable cost per unit, then you can now use at maximum, then get your fixed cost, then you can now use that to answer the question in that case. So having this at the back of your mind, I want us to go straight up into a question. We're going to pick a scenario up and then look at a question and see how we can use the high and low method. Now, I see some of you coming on. When you join, smash the like button on the video, click on it, let it turn blue. That way we get more engagement on the video, and YouTube will be able to push the video so we can reach as many students as possible. So together we can assist many students across the country, across the continent, and by extension, across the globe. So if you are watching, smash the like button. In case you've not subscribed, also make sure you subscribe to the channel, and remember to also follow me on Instagram, because I post a couple of contents that we don't post on the channel here, as well as other information that you need in order for you to prepare well for your examination. So let me pull a scenario up here. So this is the question we want to look at. Now, this is coming from my book. I told you that my book on management accounting. So I've taken a screenshot. I'm going to try to put it in this particular document here. So let's see. I think that this is it. Right. So we got it here. That's too big. So this is our question. Let's pull it up. So DG has recorded the following total cost during the last 5 years. Has recorded the following total cost during the last 5 years. So we see the output and the total cost. The requirement of the question is very critical, and that is what we got to pay attention to. The requirement of the question. The examiner said in this requirement that we should calculate the total cost, should calculate the output cost that should be expected in 20x5 if output is 85,000. So if the company's output is 85,000 units, what should be the total cost? So you realize that in this scenario, we've been given the total cost respectively, like for all activity levels. So it's a mixed cost here. It's a semi-variable, semi-fixed cost. It contains both fixed component and a variable component. And then we are also given output level or activity level for 5 years. The question we then ask ourselves is, how can we split this and then answer the question? So anytime we are faced with a scenario like this, the first thing that comes to our mind is the high and low method. So in pulling up the high and low method, so solution DG we will say that the variable cost per unit equals our maximum total cost minus minimum total cost divided by the maximum output minus minimum output. So that is our formula for the high and low method. That's our formula for the high and low method. Now, once we have this, we need to know what the maximum total cost is and what the minimum total cost is. So let's go back to the cost sheet. So let's find out. We have 145, 162, 170. So the maximum is this, 170. That is the maximum. 170. That is the maximum. Then we're going to also find the minimum. I think that is also 40. That is the minimum. So the maximum is 170. The minimum is 140. So 170 and 140. So that is the two that we have in there. Now you could see that it corresponds directly to the maximum output, which is 90,000, and the minimum output, which is also 60,000. So you realize that it is corresponding to it. So once we have the maximum total cost, the minimum total cost, the maximum output, the minimum output. What do? We substitute it into our formula so we can calculate the variable cost per unit. So let's take it there. So variable cost per unit, maximum total cost, we said that is 170,000. And then the minimum total cost, we said 140,000 divided by the maximum output, 90,000. And then the minimum output, 60,000. So we work on the arithmetic, right? And that is going to be equal to $30,000 over 30,000 units. So that our variable cost per unit is $1. So the variable cost per unit is $1. Does it make sense? You see how simple it is? Very sweet, simple, straight to the point. Okay? Very sweet, simple, straight to the point. So you identify your maximum total cost, get your minimum total cost, identify maximum output, get a minimum output, boom. Then you are good to go in relation to that. You're good to go in relation to that. So once we calculate our variable cost per unit, now we can stay with the maximum output level and use that as the benchmark to answer the question. So we will say that at maximum, what will be the fixed cost? What will be the variable cost? So at maximum, okay, let's determine the fixed cost and the variable cost at the maximum output level. So if we use at maximum, remember, total cost at maximum is 170,000. And then output at maximum is 90,000 units. So we will use this as the benchmark to be able to compute or do the various calculations. So now that we have this, why are we doing this? We are doing this because now we have the variable cost per unit, which is $1. So now that you have the variable cost per unit as $1, you can actually determine your fixed cost and the variable cost. So you know that this is from KG2 that total cost is equal to fixed cost plus variable cost. So the first thing we can determine is our variable cost, total variable cost. Now remember, we mentioned that from our high and low method, we saw that the variable cost per unit was $1. So that's going to be $1 by the maximum output, 90,000 units. And that's going to be $90,000. So that is our variable cost, total variable cost, total variable cost. So once you have your total variable cost, you can now make fixed cost the subject in the total cost formula so that you can now calculate the fixed cost. So your fixed cost will be equal to total cost minus the variable cost. And we know that our total cost is 170,000 minus 90,000. And that gives us an amount of $80,000. I hope you are following the picture. So now we have our fixed costs. We have our variable cost per unit. Remember what we mentioned from the assumption a moment ago. I told you that in order for us to succeed, we're going to be working with two assumptions under the high and low method. We're going to be making an assumption, one, that the variable cost per unit remains the same irrespective of the output level. And then two, we're going to make an assumption that the fixed cost remains the same irrespective of the output level. So far with the high and low method, we now have our fixed cost, which is going to be remaining the same irrespective of the output level. Then we have the variable cost per unit, $1, which will also remain the same irrespective of the output level. So once we have this, we can now answer the question. If we go back to the question, our question was that the examiner said we should calculate the total cost if output level is what? 85,000 units. So if output level is 85,000 units, what is going to be the total cost? If output level is 85,000 units, what is going to be the total cost? So let's go and then let's see how we put that real quick together. So if output level at 85,000 units of output level, we know already that our fixed cost, which remains the same, is 80,000. We know that our variable cost per unit, which also remains the same, is $1. So once we have the fixed cost, we have the variable cost per unit, we can flip it up on the next page. So again, your total cost equals your fixed cost plus your variable cost. We already have our fixed cost to be $80,000. So let's try to find the total variable cost. So variable cost is going to be equal to the $1 by 85,000 units, and that is going to be $85,000. So you now have the total variable cost. So once we have the total variable cost, the total cost at the 85,000 units will be equal to the fixed cost, which we've already found on the previous slide as 80,000, plus the variable cost, which is just calculated 85,000. So that in total, our total cost becomes 165,000. That is what you need to understand about the high and low method. Any questions for me? Any questions? Any questions? Any questions? So I see Augustine and Martin coming on. Good evening, Augustine. I hope that you're doing well. And I see some of you guys also joining. Welcome to the live stream. This is part 3 of our discussion in cost classification. And in case you missed any of the sessions, I'm linking it in the description to the video. So you can watch all the whole series in the description of this video and be able to understand everything that we are doing so far. Also, remember to smash the like button. It helps us a lot to promote the channel, and YouTube will be able to push the channel so we can reach as many students as possible in that case. So this is how we use the high and low method. This is how we use the high and low method. Now, I'm going to build into this question step cost so that I'll explain the concept of step cost as I am on it. Okay, as I am on it. So let me bring a B aspect of the question here, and I'm going to just scribble that here. Bring a B aspect of the question. So let's say that let's say if after 85,000 units, each extra unit costs $14, calculate the total cost if 125,000 units are produced. So I'm building up step cost into the question. So stay with me carefully on that. I'm building up step cost into the question. So stay with me carefully on that. So this is not part of the question like I mentioned earlier, but we want to build it into the system and find out how we can do the computation on that. So if after 85,000 units, each extra unit costs $14, calculate the total cost if 125,000 units are produced, if 125,000 units are produced. Now, so you realize that we already have the total cost for 85,000 units. So the B aspect, maybe let me go to a new page. So total cost at 125,000 units. Now, we already have the total cost at 85,000 units. Which has been computed as 165,000. So that is our total cost at 85,000 units. And the examiner is saying that after that, after that, we are going to be incurring a cost of $14 per unit, $14 per unit. So let's see what's going on here. So let's get the extra units or extra output. So required production. So required production is 125,000. Current output, 85,000. So the difference will be the extra output. And that's going to be 40,000, I guess, 40,000 units. So the extra output is 40,000 units. Now, if the extra output is 40,000 units, listen to the question again very well. The examiner said, if after 85,000 units, each extra unit costs $14, calculate the total cost if 125,000 units are produced. So we already have the cost of 185,000. So the extra, we will be incurring $40. So that is where step cost comes into the picture. Okay? So the step cost is going to be 40,000 units times $14. So let's punch that out. Didn't bring my Casio calculator, so I'm going to be punching right here on my phone. Let's see if I'm going to get it right. So I'm getting $560,000. You can confirm that for me as well. So that per the B aspect of the question, the total cost will now be the total cost at the 185,000 units, which is, sorry, the 85,000 units, which is 165,000, plus the step cost that is coming in, which is 560,000. So when we add it up, $25,000. So that is the answer to the question. That is the answer to the question. Any questions, please? Aaron Owusu Answer said, good evening, Nhyira. Thanks for this topic, especially the step cost. All right. Always a pleasure. I see some of you guys joining. Welcome to the live stream. Smash the like button when you join the live stream to get us more engagement on the video. And also remember to subscribe to the channel if you have not subscribed to the channel. That way, when you click the bell notification icon, when I go live, you will be able to be notified so that in case you even miss the scheduled time, you will get a notification and be part of the lecture in that case. So all these that we've discussed so far boils down to only one thing: classification of cost according to behavior. Behavior, very, very broad area, very, very broad area. Classification of cost according to behavior. That's very, very important. So what did we say? We said that cost can be classified according to what? Nature. We've dealt with that, the elements of cost. According to behavior, which is where we spoke about the fixed cost, the variable cost, the semi-fixed cost, and then the step cost. And it is then that we have been able to use the high and low method and the other concepts in order to establish our idea here very well. Jeremy said, what is the next step for the FR and FM? I don't understand your question, Jeremy. So maybe you can clarify that and I'll be able to assist you. Yes, sir. I have just paid for FM and still hustling to pay for PSA, but at least a discount of 50 could help me out. A discount of 50. Oh, really? So you just paid for FM and PSA, FM and FR. Okay, so send me hi on WhatsApp. Send hi on WhatsApp. Let's see if we can give you some discount so that you can add the PSA since you are requesting for a discount hot like that. So send me hi on WhatsApp. Okay, Jeremy. I think you have a line already. 050-114-9296. So you send hi on this number and we can assist you. If you're outside of Ghana, I wanted to say if you're outside Accra, can you imagine that? If you're outside Ghana, then you're going to add a country code that is +233 +233. So wait, but Jeremy, so send hi on WhatsApp on this, and then possibly you will be given a discount. You are requesting for a discount of 50 Ghana cedis, I guess, so that you can enroll in the other subject. So send hi on WhatsApp. Let's see if I'll have a discussion with the team and see if we can give you that so that you can enroll. All right? So I'll see you in the Zoom sessions. Now, if you are watching and you also want to enroll in our course, you can enroll in our course at NhyiraPremium.com. I think Jeremy just enrolled in the course. It's $390 per paper, and you can enroll, get access to the full course, the lecture videos, ebooks, question kits, and most importantly, you'll be learning directly under my mentorship, which means that you'll be able to join our weekly live Zoom sessions, and I will be able to hold your hand and assist you on that mentorship one-on-one session so you can prepare well for the examination and most importantly, pass the exam. So you can head on to the website and enroll today. Right, so that is classification of costs according to behavior. So let's look at the next points there. That will be classification of costs by function. Classification of costs by function. So let's get into that by function. Classification of costs according to function. Now, classification of costs according to function, Christ Hamelo said, hi, Nhyira, I want to enroll for FR. Am I late, please? No, you are not late, Hamino, you are not late. We are this week, this Friday is going to be the 4th session, and we are still on the standards. The good news is that the lecture videos are available on the portal, so you can watch the lecture videos, and in case you have any questions, I'll be hosting a one-on-one session with you. Then I will answer any questions that you have. So you are not late if only you are going to be dedicated and watch the ones that you've missed and continue with hard work and dedication. You should be able to pass the exam. So Hamenu, Gail Christ, you are not late, you can enroll, but most importantly, you got to be committed to make sure that you watch the previous lectures, and if you have any questions, I will always be available to answer the questions for you in that way. Now, what is classification of costs according to function? Classification of costs according to function simply means classifying costs according to the departments that incur the cost. So it's the classification of cost. It's a classification of cost according to the department that incurs the cost. That is classification of costs by function. By function. Okay, Jeremy said, is there any next step after the payment? Yeah, Jeremy, like I said, you have to send hi on WhatsApp. When you send hi on WhatsApp, my executive assistant will send you some details that you need to follow in order to help you to get access to assess your course and download the ebooks, okay? Download the ebooks. Then the timetable will also be sent to you, Jeremy. So send hi on WhatsApp. I think when you open the first video, those directives are there. You'll be able to download the question kit under the first video. So you click on your courses, you will see a dash there called your courses. When you click on that, you'll be able to open your courses. Then you go to course content. Then under the very first video, when you open it, below it, you will see some blue text there. These are the ebooks, the question kits that you'll be able to download them. And when you scroll to the bottom, you're going to be seeing the live Zoom sessions for this time. So let me just show you that on my screen. Just real quick, let me show this so that others will be able to also benefit as well. Right, so this is the dashboard, or this is the website. So when you visit here, when you are logged in, I'm not logged in here. So when you are logged in, you will be able to get access. So when you sign in on the dashboard, you see here on your left, you will see your courses. So that when you click on your courses, the course you enroll in will be shown. Then you click on course content. When you click on course content, you will be able to open the first video. You realize that you can see here, it says you cannot view inner content. Because I'm not enrolled, I've not bought this course, I cannot view the inner content. But if you enroll in the course, you'll be able to get all the 5 lectures under the section 1. And the first one below that, you'll be able to download the ebooks. Now, when you scroll down to the bottom, you will see the May 2021 Zoom sessions. These are the Zoom sessions that you're going to be looking at for the May 2021. However, all of these contents are relevant because they are just last semester content, and we decided to still make them available on the portal for students who want to study ahead of the class and be able to prepare well as for the exams. So that is it about the portal. Augustine said, hi, I'm late for FM, and how do I pay to join? Yeah, Augustine, you can enroll directly online. Just enroll directly online. You go to the courses, and then you select click add to cart, then you select the payments in that case. No, you will be able to make the payment from New York using any Visa or MasterCard, because we process international payments. So any Visa or MasterCard will be accepted on the website that way, because our payment partner will be able to process that for you. Now, in case you are facing any challenge also whilst trying to enroll or make the payments, you can reach us on 050-114-9296. 050-114-9296. So in case you are facing any challenge, we can see how you can be assisted so that you can enroll in the course. All right, so let's go back. So classification of costs by nature, right? So, sorry, by function. Here you are classifying the cost based on the department that incurs the cost. You are classifying the cost according to the department that incurs the cost. So if you are classifying the cost according to the department that incurs the cost, what are some of the departmental costs here? So this is where we have the following things. So examples of classification of costs by nature is where we have production cost. Okay. We have selling and distribution. We have administration. Okay. Maybe we can have canteen. Okay. Maybe we can have others. So that is classification of cost according to function. Classification of cost according to function. Then the next one is classification of cost by normality. Now, these are other ways through which we can classify costs, okay? Classification of cost by normality. This is where we will have something like normal costs. This is where we'll have something like normal cost. and abnormal cost. Now, in a simple language, normal costs are costs expected to be incurred under usual production processes. Normal costs are costs expected to be incurred under usual production processes. So if everything goes well, if production processes are efficient, if production processes are effective, how much cost do we expect to incur? So it is a cost that we expect to incur on the usual or efficient production process or system that an organization could have. Then an abnormal cost is simply any cost over and above the normal cost. So for instance, if we say that all other things being equal, should we have a good system in place as an organization, we can actually produce the issue in relation to we can actually produce maybe 10,000 units and incur a cost of 42,000. If for some reason, maybe our machine breakdown or we got our labor force going on strike, or we got our suppliers delaying the supply and all of those things, and we still produce the 10,000 units, but we incur a cost of say $48,000, that means that extra, okay, that excess of $6,000 becomes what? The abnormal cost, because you still producing the cost, you're still producing the same unit, but becomes what? An abnormal cost. Now, should we produce less at the same output level? It is still going to be an abnormal cost. If we produce less at the same output level, we will at the same cost, we will still be going to be incurring costs. So that is also the concept about what? By normality, where we classify costs into normal costs and abnormal costs. Normal costs and abnormal costs. Then we go to the next one, pulling up my slide, and that is based on controllability. Controllability. And I've already mentioned the concept about controllability to you. So if we are classifying costs according to controllability, what exactly do we mean? This is where we are classifying costs into controllable cost and then uncontrollable cost. If you remember, under giving you the differences between direct cost and indirect cost, I spoke about controllability. That direct costs are what? Controllable, whilst indirect costs are uncontrollable. You remember that clearly, right? So when we say a cost is controllable, it means that that cost can be influenced by the decision of a manager or a responsible party of the organization. That is what we mean by controllability. It means that the cost can be influenced by the decision or choice of a manager of the organization. That is what we mean by controllable costs. Then uncontrollable costs are costs that cannot be influenced necessarily by the decision of the manager or a responsible party of the organization. So we can also classify cost into controllable. So we say that direct material cost, direct labor cost, direct expenses, these are controllable costs. Why? Because the organization can determine how much it wants to incur for these items. We can determine the quality of material we want, the type of material we want. We may even negotiate with the supplier to determine the price we are willing to pay for that particular product of that particular service. So that is also something that we need to understand in there. Then uncontrollable costs. These, we cannot really influence them because they are not huge amount of cost, or they are not big cost, or they are not costs that actually take a greater percentage of our production capacity as an organization. So that is also the controllable cost and uncontrollable cost. Then we talk about the next one, production. This is where we classify all costs into production costs and then non-production costs. Production costs and then non-production costs. So that is also something that is critical in there. That is very, very important in there. So we could classify costs. So all costs that relates to the production of goods and services will be production costs, and all costs that relates to maybe selling, administration, and finance will be classified under what? Non-production cost. So when we talk about classification of costs, this is what you need to understand about classification of cost. Any questions for me? Any questions? Any questions for me? Any questions? So that is it. Like I said, there are two key topics that you need to understand if you are going to pass your management accounting examination, and that is accounting for overheads and cost classification. What we've been able to do in the last 3 sessions is to take you through the introduction to management accounting, and most importantly, we have been able to also talk about the issue in relation to how costs are classified. Any questions for me? Any questions for me? Real quick. Any questions for me? Want to take some questions from you guys. If you have any questions for me, put it in the chat for me on this. Like I said, in case you missed the part 1, the part 2, this is part 3 of cost classification. In case you missed part 1 and 2, you can check the description of this video and you'll be able to watch those lectures as well. And in case you missed the whole masterclass on management accounting that we started last week, that is also in the description of this video. You can watch how to pass management accounting and also the various principles and assumptions and basic concepts that I mentioned you need to understand in order to position yourself to pass the examination in that case. So that is what you need to understand. Okay, Malauzi said, can you explain cost function again? So we said that it is about the classification of costs according to the departments that incur the cost. Okay, so classification of costs by function, it is classifying the cost according to the departments that incur the cost. So we can have production cost because it relates to the production department, canteen cost because it relates to the canteen department, service cost because it relates, maintenance cost because it could relate to the maintenance department, administrative cost because it relates to administration of the organization, finance cost because it relates to finance department, human resource cost because it relates to the HR department. That is the concept about classification of cost according to function. Then Augustine said, in that case, can it be inferred that costs, direct costs are relevant as to that of a indirect cost? Yes, to a higher extent, when we are making decisions under relevant costing analysis, the concept of direct cost and indirect cost is going to be coming in there. But it does not mean all indirect costs are actually irrelevant, because to some extent, indirect costs can be relevant if it relates to a particular project or undertaking. So we cannot conclusively say that there is an iota of truth in the statement, but we can say that conclusively because some indirect costs can be relevant costs when we are dealing with relevant costing analysis or special order decisions. Malauzi, let me know if you understood my explanation again on the classification of costs by function. And then also, Augustine, let me know if you get an explanation I just gave. Right, so any other questions for me? That is classification of cost, classification of cost. So we're going to be continuing with our discussion, and that is going to be accounting for overheads. I cannot overemphasize the importance of these two subjects, or these two topics in management accounting: cost classification and accounting for overheads. Very, very critical. Very, very critical. Because under accounting for overheads, you will be able to also understand how to deal with the overhead absorption rates, how to prepare the cost sheets, the cost card, marginal costing, absorption costing, activity-based costing. All of these things will be captured under accounting for overheads, and we're going to be building our knowledge around that in that case. So I'm going to be concluding around here today. We have our lectures in few minutes, our live Zoom sessions. Today is Wednesday. We have management accounting from 6 p.m. to 9 p.m. That's our live Zoom sessions. So I'm going to be leaving you guys here today, ending the live stream here today. And God willing, tomorrow we're going to be continuing with our discussions with accounting for overheads, accounting for overheads. So hopefully tomorrow and Friday, we'll be able to knit that also up and set ourselves for success in the management accounting examination, ACCA F2, ACCA F5, CIMA P1, ICA Introduction to Management Accounting, ICA Management Accounting, and other management accounting studies, being a professional course, a degree, master's, or whatever that you will be studying. So thank you very much for joining the stream. It's always a pleasure coming your way. Thank you very much, you guys, for smashing the like button for us. And also thank you for sharing the video so we can reach as many students as possible. For those of you who also engaged us in the chat box, I want to thank you very much. Obi, Desmond, Jeremy, Augustine, Aaron, Owusu, and San, Hamenio, Muntala Mohammed, sorry about that, and then Maulauzi. Thank you very much for joining the stream. It's always a pleasure coming your way. I'll be coming your way again tomorrow at 4:30 p.m. GMT as we continue with our discussion. Remember, my objective, as always, is to provide you with the content you need, the assistance that you require in order for you to position yourself strategically, not only to pass the exams, but most importantly, take your career and take your life to the next level. So stay tuned, stay connected. Remember to subscribe to the channel if you have not subscribed to the channel, and stay connected, stay blessed, and I'll see you same time tomorrow on the live stream. Bye-bye.